MT5. So let me share my MT5 so we can proceed. All right, I believe you can all see my screen. Okay, so this session is not a question and answer session. It's just for us to look at the market and quickly take trades. And of course, we have a PMI coming out today by 5 p.m. Right, so we have PMI coming out today by 5 p.m. I think we should even first treat the PMI coming out by 5 p.m. to determine to determine the best set of instruments to look into and what we should be expecting. So let's quickly look at PMI. Yes, let's quickly look at the PMI. So for okay, we have PMI coming out by 4 p.m. 4 p.m. This is 3, so it's going to come out within this hour. So 4 p.m. The previous PMI, let's look at it. The previous ones came out. We had the one for October come out neutral. We had this one come out negative. This came out positive. This came out negative. This came out positive. So sometimes there's always a pattern when it comes out like that. One positive, one negative. Sometimes it always follows that pattern, right? But like we say, when it comes to fundamental, you can't really state for certain how the news is going to come out, right? So your best bet is for you to wait and be watchful, and then wait for the news to drop, and then you can actually now take your trade based on the results that came out, right? But what we're actually forecasting, or the forecasted data for this PMI is about 53.0, right? The previous one came out at 53.4, right? The previous one came out at 53.4. So we are expecting that it comes out at either 53.0 or a higher figure. So if it comes out at a higher figure, definitely we'll be getting a positive news. And if it comes out as a lower figure, it shows that PMI, which is the service producers manufacturing index, came out very, very poor. Right, so it came out very poor. So that's most likely would make the instruments to be affecting is of course your currency pairs. It would also be affecting your indices, right? So if you notice from early hours of the morning, we've had more or less a quiet market, right? We've had more or less a quiet market. So the market has actually been trading technically from one support to the other. I know I was able to take trade on US 100, US 2000, US 500. There was a very good sell on those instruments as at today, and I made a good sum of profit from it. But majorly, the overall trend of the market or overall direction of the market would most likely be determined by the results coming out from PMI today. It will most likely be determined by the result coming out from PMI today. So PMI is also it's the non-manufacturing PMI, or so it's just a report showing the manufacturing index in the US, right? So that being said, let's go to the chart. Let's go to the chart. So the best way, of course, we all know that the best way to take advantage of the news is by setting traps, right? Setting market traps, and the best way to do that, or the best way to achieve that, is using your pending order, right? Best way to achieve that is using pending order. So someone is asking for my name. I'm Solomon, right? So I'm Solomon. Yeah. So we have let's look at the indices first. So for indices, currently, for the major part of the day, we actually had this more of a mixed market. I told you price was actually ranging from the earlier fall. Early in the day, price has been ranging in between this region. So price has been trading from this point zone here up until this point. So most likely we're expecting a breakout from this zone, and that breakout, of course, we would get that as soon as the news drops. So what we're going to be doing is taking our pending orders. Right, so I'll go in for my pending orders on a 15 minutes time frame, because PMI, I'm not certain that volatility on PMI will be as high as that of CPI and NFP. Right, so but of course, PMI also has its own level of volatility. So in order for you to take advantage of the market and you're able to take good trades, it's better you go to a smaller time frame, right? You don't want to get you don't want to miss out on that move, since the spike might not be a lot. So you want to go to a smaller time frame to ensure that price actually triggers your entry and gets to your take profit. So here I'm going to be going for a sell entry just below my support here. So you can see price has actually tested here. This is my support one, and around that region also we also have another support. Right, we also have another support around this region here. So most likely I'd go in for a sell on a let's check it on a 5 minutes time frame. Okay, right, yeah. So on a 15 minutes time frame, I'll go in for my sell at price level 18091.47, 18091.47, 18. So this is US 100. So 18091.47. I'll go in for my sell at around that point. Take my profits. Take my profit at 1804318. 1804318. 18. Sorry. Okay. So I'm taking my sale at 1809147. Take my profit at 1804 3.85. Sorry, 3.85. 3.85. Right. So I'll do well to drop most of those entry on the chat session, so you could also take advantage of it. Right. So alternatively for my buy, right? Alternatively for my buy, I'll be going in for my buy at price level 18195.00. 18195.00. I'm going for my buy at 18195.00. Right. So I'm taking my profit before the next resistance at 18259, 18259.30. 18259.30. Right. So if we didn't have a PMI news coming out, we would most likely just be looking at the charts technically, trading in between this zone. So it would have been a good buy, a good instant buy as at now, right? Because price is currently bouncing off the support zone. But of course, we are expecting the news, and we have to be very mindful. If you're going in for a buy at this point, just based on technical analysis, can you all hear me? Can you hear me? Okay, so if you're going in for a buy based on just this technical analysis, definitely by the time the news comes out and it doesn't go in your favor, you might be short in the leg. So it's best you have pending orders because of the news coming out by 4. Right. So let's quickly look at US 2000. So for US 2000, already I marked out my entry for US 2000 based on the ranging zone where price has been ranging on US 2000, and we all know how volatile US 2000 can be. So I'll be going in for a quick sell on US 2000 should price break that support. Looking at going in for a sell at price level 2060.4. Going for a sell at 2060.4. Then take my profit at 2054.2. 2054.2. 2054.2. So alternatively for my buy, I'd go in for my buy on US 2000 at price level 2037, 2073 rather, 2073.9, 2073.9. Take my profit at 2079.1, 2079.1. I'm going for my buy at that point. Right. So, like I said, we are trying to trap price because of the PMI that is coming out. So we can't tell if you're doing technical analysis alone, you might just get caught in the crossfire. Right. So for US 500, looking at US 500 at on a 15 minutes time frame. Right. Looking at US 500 on a 15 minutes time frame. So you could also see that price has actually been giving more or less a quiet market for today. So same thing here. I'm going to mark out my key areas of support and resistance here. So you could see your major resistance around this point where price tested this region once and tested there again for the second time today. Right. So most likely, if at all there's actually going to be a buy, I'd want to go for a buy above this.
I can't hear anybody. I can't hear you here.
Okay. So please check with I believe others can hear me, right? If you can't
Yes,
hear me,
we can
please
hear
check.
you. We can hear
Okay.
you. Please continue.
All right. So if you can't hear me, please check with your microphone, or you could leave the class and then join in again, right? So check your device. right? Check your device. Others can hear me loud and clear. All right. So if I'm going to go in for a trade on US 500, I'd want to go in for a trade once price is able to break below this point, right? So I'd go in for my sell below. Okay, so looking at it here now, I can't see the previous low. Please mute your mic so that you don't disturb others. So I can't see the previous low, so I have to go to a higher time frame. I couldn't see the previous low, so I had to go to a higher time frame. On a 1 hour time frame, you can see that price was previously resisted around here, making this place a good entry point. So below that point to serve as a good entry point, because once price is able to comfortably break below this point, then that sell should be in effect. Then and have my next take profit before the next support, right? And then for a buy also, you see this support zone, right, which would currently now be serving as a resistance for price. So if price is comfortably able to go above that, then most likely a buy would be in effect. So I'd want to go in for my buy above that point. So those are safe zones for me to put in my entries. Those are safe zones for me to put in my entries, right? So I'd go in for my sell at price level 5111.1. I'm going for my sell at 5111.1. 5111.1. I'll take my profit at 1596.0. 1596.0. Then alternatively from my buy, I'd go in for my buy at 5135.3. 5135.3. Are going for my take profit at 5146.5. 5146.5. 5146.5. Right. So we are looking at the US market. So definitely we're going to be looking at US indices and currency. So let's quickly treat currency pair for my currency lovers. Currency pair for my currency lovers, you could actually see this trade trade pattern is actually very clear, right? Price ranging, best thing is to wait for a breakout. And like I said, the market has been ranging, waiting for the effect of the PMI, right? The market has actually been ranging, waiting for the effect of the PMI before a clear direction is actually now stated, right? So what I'm going to be doing is taking trade based on the breakout of price, right? Taking trade based on the breakout of price, right? Naturally, I expect that, of course, we have that news coming up on USD. For Euro, we don't have any news coming up on the Eurozone. Right, we don't have any news coming up on the Eurozone, and investors in the US has actually been silent, looking at the fact that they are waiting for the result of PMI. So most likely what we are going to be expecting is price hitting this resistance point, and then if it comes out positive for the dollar, right, we are going to see a major drop in Euro USD. Right. So personally, I'm actually going to be going in for a sell on Euro USD. Right. And of course, the last we've had a whole lot of inflation crisis around the dollar, and speculations around their further increase in interest rates, which they've been using as baits, right? Of course, the last CPI also came out very positive, which would most likely give an insight into this PMI. So CPI came out positive the last time. So most likely we should be getting a positive PMI for today, according to the data I was able to come up with, right? So if that's in play, the best bet at this point in time would be to go in for a sell, right? But if I'm going to be going in for a sell, if I'm going to look at it technically, it will be taking a sell once price is able to hit this my resistance and then come back down, right? But it's the news, so I want to be as certain as possible. So going in for a breakout will still be my best bet rather than just trading technically. So if I'm going to go in for a sell, I want to wait for price to get rejected, break below my support, and then pick my trade. That would be my best bet. It's a long shot, but it's the safest thing you could do rather than going for an instant sell now and then the PMI comes out negative. So if I'm doing that, I'll be going in for my sell at price level 1.08353. 1.08353. 1.08353. I'll be taking my profit at 1.08255. 1.08255. So I'll take my profit at that point. Then if the PMI comes out positive, negative rather, if it comes out negative for the dollar, most definitely you would see the euro hedge higher than the dollar. Then you see a bullish move on euro USD. All right, so I'm going to be going in that scenario, you could have your pending order to trap price at for a buy. Have your buy stop at price level 1.08577. 1.08577. Then have your take profit at 1.08654. 1.08654. 1.08654. So that will be for euro USD, right? For USD JPY, of course, for USD JPY, the major time you have a strength on the JPY is usually during the Asian trading zone, right? And once you're out of the Asian trading zone, the dollar mostly have that edge over the JPY, and that's why you've been seeing major pull down, right, on USD JPY. So except on days where you have negative news, and of course, of recent the Asian zone has not been doing so well in terms of their production index. Japanese yen is actually a producing economy. So, and they've still not gotten to that full production capacity as they used to before, right? And especially with the oil crisis and all of that, production cost has gone up, inflation. So when we say this inflation we're facing in Nigeria is not just a Nigerian thing, it's a global thing actually. So most countries, even also including the JPY, is also suffering from inflation. But the only thing is that they, to a large extent, have been able to manage theirs to ensure that it doesn't really bite back on them, right? But we are in the US trading zone, and I still expect that there should be a further push down on USD JPY. I still expect a further push down on USD JPY, right? So if I'm going to be going in for a trade on this, I'd want to go in for a sell, right? A continuous sell once price is able to break below this support zone where price is currently resting at, right? So a good point for a continuous sell on this instrument, let's check it on a 15 minutes time frame. So we'll get closer entry, right? So on a 15 minutes time frame, okay, so on a 15 minutes time frame to get a closer entry, I'd want to go in for a sell. All right, so let's also calculate spread, because if you're giving a very close trade, this is about 15 pip, and for USD JPY, 15 pip on USD JPY, also adding spread, I don't think that's a very profitable trade, right? That's not a very profitable trade. So let's go below that region, right? That region will have been a very good trade, but if you're looking at it, by the time you're paying up your spread, you most likely will not have enough profit to keep you going. And it's a currency trade. We all know that currency is not very profitable. If it was indices, you could do a tight trade and still make something good from it. But it's currency, so let's just leave that. So if I'm going to go in for a sell, I'll go in for a safer sell at price level 149.809. 149.809. That would be a safer entry for my sell. And then going for my take profit at 149.553. 149.553. 149.553. So alternatively for my buy, right? So should it come out positive for the dollar? Should it come out positive for the dollar? I'm actually going to go in for a buy at price level 150.625. 150.625. 150.625. Take my profit at 150.957. 150.957. 150.957. So that's for USD JPY. So let's look at USD CAD. Let's look at USD CAD. So for USD CAD, looking at USD card on a 1 hour time frame, you see that the card has actually been dominating the USD card market for quite for almost the major part of today. We had this major fall, a quick pull up, and then price went back down. Right, so I expect that this sell run should end anytime soon. I expect this sell run to end anytime soon, especially considering the fact that we have news coming up on the USD, right? So if I'm going to be going in for a buy on this particular instrument, and if you pay close attention in the 1 hour time frame, price has actually tested this resistance point roughly around 3 times. One has tested here, second time, and tested here again for the third time. And for an instrument like a USD card, you want to be on a very safe, you want to go in for a very safe entry to ensure that you don't place your trade and then you're dangling in between your buy and your sell. Right? So if I'm going to go in for a trade on this, though my preference on USD card is actually also going to be a buy, right? It's going to be a buy. But if I'm going to go in for a buy, I'd want to go in for a buy above here at a price level 1.36058. 1.36058, right? 1.36058. Notice how I'm not putting my entries too close to price, right? I don't want a scenario where price triggers my entry, right? And then start retracing. So if at all price is actually going to trigger my entry, it simply means price must have broken a major resistance or a major support before picking my order. That way I know that there is a 90% likelihood of price traveling towards my actual direction. Right. So if price doesn't break a resistance or break a major support, most likely you see price just trigger your entry and then start ranging in between. Right. So you're neither making profit and both. Sometimes it even goes and triggers both entry and you are in between. So if at all the PMI doesn't move as much as it is supposed to move, then it shouldn't even trigger my entry at all. And that way I'm safe. I'm not caught in the crossfire. Right. So that's my entry for my buy. Then alternatively, okay, I'll take my profit at have my take profit at 1.36, 1.36236, 1.36236. Have my take profit at 1.36236. Then alternatively for my sell, I'll go in for a sell at 1.35674. 1.35674, going for my sell at 1.65, 1.35674, then have my take profit at 1.35534, 1.35534, 1.35534. So that's for USD card. So let's look at one other USD pair before we slowly just ease into the next phase of the class. So let's look at AUD USD. AUD USD. So AUD USD is also another very stable currency pair. If you notice, the AUD and the USD is almost at par. Most times when you get a pull down, almost immediately you get a push up on AUD USD, right? So I'll be expecting that AUD being the dominant currency of this market for the past few hours now, it has actually gotten to a support to a resistance point at the top. I expect that any moment from now, once the news comes out and it's in favor of the dollar, we should get a reversal of this little trend. Though you can't call it a trend, but let's just stick to that. So you should get a reversal from here. So once price is able to hit here, and the news, of course, everything is determinant on the news. So if the news comes out in favor of the dollar, most likely you continue to get you would have a reversal here. But if it doesn't, then you might continue to see a buy trend on AUD USD. So the best thing to do also here is to set pending orders. The best thing to do here is also to set pending orders. So if I'm going to be going by that, I'll go in for my buy. I'm going for my buy. Notice how price ranged around there on the 28th of February, right? Price ranged around there, and it's currently around that zone again, right? If you look closely, it's currently around that zone. So most likely price will struggle above at that zone before it's able to escape. So if price escapes that zone, then I should be able to go in for a good buy at price level 0.65059. 0.65059. Then I'd have my take profit before the next resistance at 0.65190, right? I go in for my buy at 0.65059, 0.65059, have my take profit at 0.65190, 0.65190. Then alternatively for my sell, I have my sell below this support zone, right? I'd have my sell below this support zone, right? So there's a support here, and there's actually a very strong support here, and then a weak support around this point. But if I'm going in for a sell around here, most likely if I'm going to be targeting my take profit, it will be at the end of this support. And if you watch closely, that will not be a good trade, because by the time you're calculating how many pip it will be from my entry points down to my take profit, it will just be giving me roughly around 8 points, right? And 8 point on USD, on AUD USD minus spread. So by the time you deduct spread, you discover that that trade is not worth your time. So the best bet will be to come below that support entirely, right? The best point will be to come below that support entirely, going for a sell below that point, and then have your take profit few pips after that. So let's go to a 1 hour time frame to see the next major support after that to determine our take profit. So, right, so the next major support is somewhere around here, right? So it's somewhere around here. Well, of course, there was a little bit of resistance here for price, if you can see that clearly. So that this point now will serve as a good take profit point. So let's go back to our 15 minutes time frame. So for my sell trade, I'll be going in for my sell at price level 0.54, sorry, 0.64 rather, 0.64737, 0.64737, going for my sell around that point, have my take profit at 0.6452562. So I have my sell at 0.64737, have my take profit at 0.6452562, 562. So that's my entry for USD, AUD USD, for AUD USD. I think we've covered up all the USD pair, all the major USD pair, and then all the indices, all the major USD pair and all the indices. Right. So so let's just give a few minutes for those who are going to be taking those entries before we slide into the agro commodity class. Okay, so okay, someone is asking of US30 and then gold. Yes, US30 and then gold. How will I have forgotten gold? So let's quickly look at US30. I saw US30 now. Okay, so for US30, we'll treat US30 and also treat gold. For US30, of course, look at price currently struggling around this support zone, and I think volatility has started picking up, right? Slowly, volatility has started picking up in the market. So I'd go in for my sell on US30 at price level 388, 388, 38. That's 388, 38, 388, 38. I'm going for my sell around that point. Have my take profit at 387, 387. 61, 38761, 38761. Right, I have my buy. I go in for a buy at around. I'm going for my buy at around 38933, 38933, 38933. Have my take profit at 3. I'd have my take profit. Can you all hear me? I'd have my take profit at 389. 38987, 38987, 38987. Then for gold, which will be the last instrument to be trading, Okay, so for gold, I'd go in for my buy on gold. Let's look at it on the 1 hour. Okay, so gold has gotten to the highest point in a very long time. So and we had a major fake out on gold, yeah. Right. So I'd want to be very wary of that and not be hasty to jump into that trade. So if I want to go in for a buy on gold, I'd want to go in for a buy after that fake out at the top here. After that fake out, that would be at 2144.26. 2144.26 are going for my buy around that point. Have my take profit at 2159.07. 2159.07. Then alternatively for a sell, are going for a sell on gold at price level 2120.17, 2120.17, that's 2120.17. Have my take profit at 2108.85. 2108.85. 2108.85. So I'd go in for my sell on gold at those price figure. So let's have your pending orders set, and let's just wait for the news to come up. Right. So we have about 30 minutes to the news. Less than 30 minutes to the news. We have less than 30 minutes to the news. Right. So So if you're on that trade, if you check US 100 has actually almost gotten to take profit even without, I think the volatility just pick up. So we are having a panic sell on US 100. If you're smart enough, you will have done a quick scalp market. I don't even expect you to be seeing volatility like this and not scalp the market, right? If you're seeing volatility like this, a good scalp on the market, if you've scalped a good sell, you would have actually taken advantage of that, right? You will have actually taken advantage of that. See, that's so from as at when I started that, price has actually moved roughly around that's roughly around the 700, that's 74 pip, roughly around 74 pip on US 100. That's a good trade, and there's still a lot of volatility on it because price just broke this weak support and is heading towards this other support, right? So if you're smart enough, you could actually take a good scalping position, a good sell position on it, and then as soon as you get good profits in the market, you're out, right? As soon as you get good profits in the market, you're out, right? Let's see what's happening on US 2000. US 2000, we're still having okay, so price actually triggered but started pushing back up, right? So price triggered but started pushing back up. So ensure that you have for US, for those that took US 2000 trade, of course you know that if you're taking US 2000, it should be on a very good capital to enable you to hold your to enable you to hold retracements in the market, right? To enable you hold retracements in the market. So let's just wait for the effect of the news. And if you have a buy on US 2000, so now this is even a good opportunity for me to explain how to remedy trades, right? So take for example, I place pending orders, and before the news, my order is triggered, and I'm not my order is triggered, and then the news comes out against me. So the best thing to do, rather than hold on to my losses, right? I have one sell trade on US 2000. Rather than hold on to my losses, I could cut out my trade and take, or before cutting out my trade, if I have good margin, I could take an extra trade, or take two extra trades on the opposite direction, ensuring that by the time I'm going to be cutting out my negative, I should have enough profit to cover up for my negative and still have profit left for myself. I don't know if you get that explanation. So take, for example, in the case of US 2000 now, price triggered my entry, right? And in as much as price has triggered my entry, of course, definitely you'd be looking at having your stop loss above your resistance point. So if I'm on a sell, your stop loss should be above your resistance. So I'm targeting my resistance. In as much as price has not broken above my resistance points, I can still hold on to that my sell trade, right? So if for any reason price breaks above my resistance, it triggers me to go in for a sell, for a buy, right? As soon as price breaks above my resistance, it triggers me to go in for a buy. So now here's the tricky part. Because price has gone in for a buy and my sell trade is currently running negative, I could take a double stance on my buy, or I could even take a triple stand on my buy, right? Ensuring that by the time I'm doing a cumulative closing, right? Because once I'm taking my trade on my buy and it goes into profit, I have my 3 buy running in profit. I have no business holding on to my sell trade anymore. So I close out my sell trade and I'm able to accumulate profit on 3 buy trades. That will ensure that I'm able to cover up for the negative I incurred on the bad trade, and then have a little extra for myself. I believe you understand that, right? So that's just the best strategy, especially when you're trading fundamental and you've put in your pending orders before the news, because best time to put in your pending order is always before the news. And sometimes the market can be crazy, volatility can push the market, because especially when there's a panic buy or a panic sell, right? You get the market actually move in one direction before the news, and then by the time the news comes out, the direction changes. So the best strategy, like I said, take triple stance, or you could even, depends on the equity you have in your account, you could take up to 4, ensuring that. So the major thing is just to ensure that by the time I'm going to go into profit, right, I should have enough profit to cover up or to mediate for the losses I'm going to be closing out, and still have profit left for myself. It's a very, very simple strategy. It's a very, very simple strategy, and you don't be hasty to close out your drawdown, right? Don't be hasty to close out your drawdown. So in as much as price has not broken above your resistance, you are still in the clear, because price will still be rejected. If price has not broken above your resistance, price will still be rejected and it will still come back down. So that's why, as a trader, you also need to be very patient. Speed and accuracy is very, very important, and you need to trust your analysis, right? You need to trust your. I've seen a lot of traders lose money because they started doubting their analysis, right? They started doubting their analysis, and always have a backup plan. So that's it. So once you have a backup plan, right, and you trust your analysis, definitely you are good to go, right? For US 500 also, it has triggered your entry. It went into a little bit of profit and then it's pushing back up. So we are still in that trade, so let's just hold on to it. And as soon as we get good profit, so I don't expect you to be using very little lot size on this trade, because it's PMI, and for fundamental news, you want to take advantage of that rush, right? For fundamental news, you want to take advantage of that rush. So as soon as it goes into good profit, you are out of the market. At most, target 10 pips, and you're out. If I'm on US 2000, for example, that will be giving me about 1,200 per pip movement on 0.01. If I can do a standard lot, right, a standard lot that will give me roughly around 120k per pip movement times 10, that's over a million naira, and I'm out of the market. But I can't do that if I don't have good equity in my account. And let's say, for example, I have 500k in my account. I can stick to a mini lot size 0.1, and I'm making roughly around 12,000 naira per pip movement. If I'm making 12,000 naira per pip movement on US 2000 naira times 10 pips, so 10, I'm just targeting 10 pips from that news times 10 pips, and I'm out of the market with a good amount of money, right? Over 100,000 naira, right? So that's a good way to trade. You don't have to fundamentals. when you hear fundamentals and you know that there's volatility, it shouldn't also be a time for you to think you can easily double your money. Of course, you could make a whole lot from fundamental, but you also need to be smart about it, right? You also need to be smart about it. Once you're using good lot size, because I don't know why you would actually wait the whole time to trade the news and then you start trading 0.01. It doesn't really make sense, right? So if you're using a good lot size, you don't need to wait to take all the pips, or you don't need to wait for price to travel over 100 pip before you take your profits. 10 pip with a good lot size and you're out of the market, right? So if you're taking US 100, by now you'll have closed your trade on US 100, waiting for others to take effect, right? So that's it. So I don't think the ones on currency pair, let's check the ones we took on currency pair. Let's check the ones we took on currency pair. Mind you, the news has not dropped yet, right? This is just market noise. What you're seeing here is just market noise, pending on when the news comes out, right? What you're seeing here is just pure market noise, pending on when the news now actually comes out, depending on when the news actually now comes out. So we took Euro USD. So Euro USD is also very quiet. It's still quiet. USD JPY is also still very quiet. USD CAD is also still very quiet, right? So for currency pairs are still quiet. They've not got into our entries yet, while indices has actually got into our entry. So you could still follow through on the trade. Uh, let's see. So we're about transitioning into the agro commodity class. So for agro I'll employ all of us to just stay behind and attend agro commodity class. So I know we've been trading on indices, we've been trading on currencies, right? Indices and currencies that we've been making good money from that, right? But if you've traded the agro commodity market, right, you would know that there are some markets that are more than every other market, and that market is the agro commodity market. Agro commodity market is one market where you have the largest profitability per pip for any instrument. And when I say the largest, kid you not, it's the largest profitability per pip. Of course, you've traded US 2000 and you know what US 2000 can do. So imagine making times two of what you are making on US 2000 on an instrument, right? How crazy can that be? And that's the world of agro commodity. And of course, if you're going to be trading agro commodity, it's not for the faint-hearted. And when I say it's not for the faint-hearted, capital matters a lot. Capital matters a lot. So let's slowly transition into the agro commodity expose. Right, let's quickly transition into the agro commodity expose. So let me share my screen for agro commodity. All right. All right. So I believe you're all with me. So in times like this, you would wish you have two devices, one to still follow up in the class, the other one to follow up on your trade, right? So, but let's just go into the agro commodity market so we don't take much time, right? So we all know about agro commodity, and it's something we use on a day-to-day basis, right? We have the likes of corn, coffee, wheat, cocoa, right? So a whole lot of us will say, but these are food we eat on a daily basis. How does it concern the market, especially for those that have not traded the market to the point where they know that there's a thing called agro commodity trading, right? For those that have not traded the market to the point where they know that there's a thing called agro commodity trading, right? So agro commodity, just like every other instrument, are commodities that we use on a day-to-day basis that are listed on the market, right? They are listed on the market, and because they are consumable goods that we use on a day-to-day basis, their profitability margin is actually very high because of the high demand for this particular set of commodities that we'll be treating, right? So before we go into it, let's look at this quote from Joel Salitan, right? So we said we've got this cultural mentality that you've got to be an idiot to be a farmer, right? A lot of people believe that it's only idiots that are farmers now. It's only idiots that are farmers, but it's a lie, right? We can tell that even with the way the Nigerian economy is now, it's farmers that are actually balling the most because he doesn't need to buy food, right? He's not buying food, he's feeding himself from the produce that he's making, and he's also selling to others. So in this point, they are the ballers of this economy at this point in time, right? They are the ball. Even if they decide not to sell to you and I, they will still live comfortably, right? They will still live because at the end of the day, how much do you need as a person to survive, right? So you don't have to be you don't have to be an idiot, or you don't have to have that mentality that only idiots go into the farming market, or only idiots go into the agro produce market, right? It's something anybody can go into. And me as a trader, I now look at it. Okay, I'm a trader. I've been trading all my life. Does it mean I now need to go and start learning agriculture? I need to start buying a piece of land. I need to start doing this. I need to get a tractor, because if at all I'm going to go into agriculture, I mean, I need to go in to agriculture in a big way, right? I'm looking at going into agriculture Obasanjo style. Right? But how many of us can afford to go into agriculture Obasanjo style? Buy tractors, buy 100 acres of land, and then start building facilities and all of that, right? You do your irrigation system. There's a whole lot when it comes to farming, right? And it will cost you a whole lot when it comes to capital for trading, right? So how do I, as a trader, benefit from this agricultural market, right? That is generating trillions of dollars, right, on the stock market on a day-to-day basis. How do I key into that? And that's what we call farming online, right? We call farming online. Just like you trade your gold, you trade your USD, you trade your GBP and the rest, you could also farm online by trading agro commodity produce, right? We can trade online by trading agro commodity produce. And I said it before, agro commodities are crops that are grown, harvested to provide food and other raw materials, and sometimes fuel. So it provides food, and of course, anything that has to do with providing food and raw material, you know that the demand for that particular thing would always be high, right? You would know that the demand for that particular thing would always be high. So because I know that the demand for that thing would always be high, there's tendency for that price, for the price of that particular produce to keep soaring high. Right? There's tendency for that particular produce to keep what soaring high. So why don't I take advantage of the? And whenever you're trading the market, what do you trade on? You trade on the price quoting. You're trading on the price of this particular instrument, right? Not the actual price. So when it comes to agro commodity trading, you're actually trading on the price of agro commodity. You are trading on the price of agro commodity, right? So bearing that in mind, all I just need to do is I don't need to set up a farm, right? I just need to have good amount of money in my trading account, and I can key into what farmers are doing worldwide, right? Based on demand and supply of this produce, right? And of course, we all know that agro commodity is traded globally. So it's a global market. It's a global market. So because it's a global market, there would always be volatility, right? Because it is a global market, there would always be what? Volatility on agro commodity, right? So what is agro commodity trading, right? Agro commodity trading is just class. It's the largest traded commodity class, even larger than oil and gold. We all know about oil and gold, but how many people in sense actually, aside the US that uses oil and gold, or that uses gold as a safe haven, or aside the US that place a huge deal on oil, and some countries that place a huge deal on oil, right? Some countries have their economy solely built on agriculture. You have the likes of Brazil. Their economy is so dependent on sugar, right? Wheat, Baileys. Australia also has a sector of their economy dependent on Baileys, wheat, soya beans, right? US also, because their economy is very diverse, they also have a section of their economy also stemming from agricultural produce, right? Corn, wheat, right? A whole lot. Africa as a whole also has some of its major economies stemming from agriculture. So definitely, this is a commodity class where if you're invested in, you're definitely going to be making good returns, right? Agro commodities out there. We have corn, we have wheat, we have coffee, right? Those three are like the big three, right? They are the most traded agro commodity pair out there. And why is that so? Because they are the most profitable of all the agro commodity pair, the most profitable and the most easy to predict, right? The most easy to predict. And of course, because these agro commodities are almost available all year round, they are almost available all year round, right? Their season is almost available all year round, right? So you could easily get a volatility on this particular instrument because of that key factor, right? So why would I choose to trade agro commodity as a trader over? Why would I choose to trade agro commodity as a trader over commodities, over indices, over currencies? For one, agro commodity is the most profitable. It's the most profitable instrument on the forex market. 100% the most profitable instrument on the forex market. And it is less volatile. Have you seen volatility? If you look at the likes of D30, look at the likes of US 100, look at volatility. Sometimes a lot of persons that are not skilled in the market, might not be able to follow through on the volatility in the market, and it ends up dealing with them, right? Because it's not about seeing volatility, it's about how can you follow up. Sometimes you might need to place a sell, and before you place a sell, volatility has gone, and or before you know it is reversing, right? Agro commodity does not move like that. Agro commodity is slow and steady. So if it is going to buy, it would give a straight buy. If it is going to sell, it will give a straight sell, right? So there's no two ways about it. If it's going to buy, it gives a straight buy. If it is going to sell, it gives a straight sell, right? Another reason why I'm actually going to pick agro commodity over every other set of instrument out there is because agro commodity has a global price value, right? And it's always appreciate over time, right? It's always so commodities in general always appreciate over time, and agro commodity as a whole always appreciates over time. The price of corn as at 10 years ago is different from what it is now. The price has increased, and over time it keeps increasing. Over time it keeps increasing. Over time it keeps increasing. So you can easily bank on that to determine what position you'll be taking in the market, right? So the only time that you might get a decrease in price on agro commodity would be as a result of bad events, right? The only time you get a reduce in price might be, yes, as a result of bad events, right? Which would be explaining further, right? So we have easy predictability of the market, right? So agro commodity is easier to predict compared to indices, right? Compared to currencies. Currencies sometimes can be highly political. Like now we are waiting for CPI to come out. We are waiting for FOMC. Fetcher is coming to say this. Okay, like let's take the US for example. They've been promising they were going to increase interest rates since November, and they've been promising and promising, and all of a sudden, coming to February, they now put a statement out that they will be pushing increase of interest rate down to June, right? So you can see a whole lot of politics playing around this market. But when it comes to agro commodities, you hardly get most of those things. And why is because they are key movers of the agro commodity markets, which you can easily just look out and you can use that as a determining factor. Right, there's key movers to the agro commodity market, and with that, you can tell that this is the actual direction that the agro commodity market is going to be going in. The first thing is inflation, right? Inflation. So inflation as a whole is a key indicator of how healthy an economy is. So how expensive is it to get consumable goods in the economy, right? How are the citizens living? Is it cheap for them to get food? Is it cheap for them to get clothes? Is it cheap for them to get raw materials and all of that, right? So once things start to get expensive, like Nigeria now, things are getting very expensive, and we are complaining the prices of goods are going up, and that's just a typical example of what we call inflation, right? So once inflation data comes out and it is very high, you know that definitely agro commodities would actually be shooting high because of the high level of inflation in the economy, right? And key inflation data is CPI. a major key inflation data is what? Is CPI. So once CPI data is coming out, right, you could also decide to trade. You could also decide to trade on agro commodity. Once CPI, so aside just looking at indices and currencies, you could decide to trade agro commodity on CPI day. You could decide to trade agro commodity on CPI day, and I can assure you, you would make double of what you would make on either US 100, US 2000, or US 500 combined. Right? You would make double of what you make on US 2000, US 500, US 30 combined. You make more trading on agro commodity on CPI day compared to what you make on other days. Another thing that moves the agro commodity market is the season. The season. So, of course, each of these, because they are crops, they have their own season. They have their own season. So if there is a season for corn, once it is the season for corn, what you notice that the price of corn is actually going to drop, because at that point in time, because of demand and supply, we all know that as traders, the law of demand and supply should be our friend, right? So once there is high demand, right, and less supply, price goes up. When there is more supply and lesser demand, price comes down. So during harvest season, right, what happens? There is a lot in circulation. There's a lot in circulation, and because the produce available in the market is enough to cater for everybody, the price will naturally tend to what? Tend to drop. The price will naturally tend to drop, right? So another thing that affects the market is weather condition. So if at all I'm going to be trading, of course, I need to have a fair knowledge of how each of this weather affects crop, right? So if the weather is bad, crops will not be doing well. If crops is not doing well, right, definitely harvest will be poor, right? Definitely harvest will be poor. And since harvest is poor, that will lead to what? Spike in prices. That will lead to what? Spike in prices. And because that led to spike in prices, of course, I'm expected to buy. I'm expected to buy. Also, sometimes bad events, I was saying something, bad events can actually push price of agro commodities to also push up. So let's take, for example, what happened between the Russia-Ukraine war, right? So at some point during the heat of the war, right, on the sea, Russia was bombing most of Ukraine's agro produce that was being sent out. You know, they at some point they started getting low on war budget, and they needed to sell agro produce in order to raise money for the economy. And what Russia was majorly targeting was their ships, their export ships that was taking wheat, right, wheat and barleys to the rest of the world. So that will cause a hike in price, because the goods that were supposed to go out for circulation reduced. The goods that were supposed to go out for circulation reduced, and it was not able to go to cater for the supply, the demand at hand at that particular point in time. And then we started seeing the increase in produce like corn. We started seeing the increase in produce like wheat. We started seeing increase in produce like soya beans, and it kept going up, right? So it wasn't until they called a truce, right, and came to agreements that, okay, allow our vessels to pass through your waters. Just allow our vessels to pass through your waters. The war does not concern our trading route, because it's an international trading route. So the war shouldn't concern our trading route. And then supply was actually restored again, and that brought price of agro commodities down. Right. So another thing that could actually also affect the prices of agro commodities would be agricultural advancement. Right. So when it comes to improvement of new seedlings, right? When there is better manures, fertilizers are being produced, all of these can actually affect the outlook of price. So if there is improving maybe manures, improving the quality of seeds that is being planted, of course you get more harvest, and that would give a lot in supply, bringing price down, right? That will bring a lot in supply, and that will bring price down. There are still a couple of other factors that can also affect that can also affect price, which is also government policies, right? Government policies to a large extent can also affect agricultural produce. So government policies like farmers tax, right? Farmers loan, because like like the US government, sometimes they give grants to farmers in order to help them produce more. So when some of this is actually achieved, it has a way of making price softer to bring the price of this produce down, right? So when do we trade agro commodity? So agro commodity, unlike other instruments, has two open and two closing time. So the first open time for agro commodity is by 1 a.m. It opens 1 a.m. in the morning and closes by 1:45 p.m. in the afternoon. So it opens 1 a.m. in the morning and then closes at 1:45 p.m. in the afternoon. So it means that from the hour of 1:45 p.m. to 2:35 p.m., you won't be able to trade the agro commodity markets. So from the hour of 1:45 p.m. to 2:35 p.m., you won't be able to trade the agro commodity markets. And then it opens again by 2:35 to 9 p.m., right? It opens again by 2:35 to 9 p.m. And that's the trading zone. And it trades Monday, Tuesday, Wednesday, Thursday, and Friday. So you don't trade agro on a Sunday. So when I say market closes, it closes completely. So if you're trying to place a trade around that time, it will tell you the market is closed. If you're trying to trade around the closing time, it will tell you the market is closed. The market is closed. So once it is 9 p.m. in the evening, right? If you have a trade on agro commodity, once it's 9 p.m. in the evening, the market closes and you won't be able to close your trade nor take a new trade, right? A good land for farming. The agro commodity market is actually a very, very good land for farming. I know a whole lot of us have been hunting the market on the indices market, on indices, on currencies, but I can tell you that agro commodity is a very, very good land for what? For farming. Agro commodity is a very, very good land for farming. And why is that so? Because of the profitability index on agro commodity. I was telling you about how profitable the agro commodity market is, but now let's take a look at it on a practical scale. Now, let's take a look at it on a practical scale. How profitable is the agro commodity market? So let's take wheat as a case study. If I'm taking a 0.01 trade on wheat, for example, I'll be making roughly about 162. That's 1,662 naira. That's 1,662 naira per pip movement. So imagine I'm targeting the 10 pip with 0.01, right? Imagine I'm targeting 10 pip with 0.01. That'll be making me roughly around 16,000. That'll be making me roughly around 16,000 naira per pip movement on wheat, right? So if I'm going in for that same trade on a standard lot, if I'm going in for that same trade on a standard lot, I'll be making roughly around 166,000 naira per pip movement. 166,000 naira per pip movement on a standard lot. And I'm going in for those 10 pip. And I'm going in for just 10 pip. That should be giving me 1.6 million naira for just 10 pip. You know what 10 pip in the market is? 10 pip is actually very small. Price can cover 10 pip within the twinkle of an eye. And imagine within the twinkle of an eye, you make 1.6 million naira on a standard lot on wheat. Do you know how crazy that sounds? Right? I can actually make 1.6 million naira just on a standard, on 10 pips on wheat. Okay, now let's look at corn, right? For corn, if I'm using 0.01, that will be making me 2,000 naira per pip movement, right? Even US 2000 now, even US 2000 won't give you up to 2000 naira per pip movement. US 2000 will give you roughly around 800 naira per pip movement or thereabout. But corn will give you 2000 naira per pip movement. So definitely, if I'm on 0.01 and I'm targeting just 10 pip, right? Because I told you volatility on when it comes to agro commodity market, you won't get a whole lot of volatility. What you are banking on is the profitability index. You're banking on how profitable it can be. So if I'm targeting 10 pip on 2000 naira on 0.01 on corn, I'll be making roughly around 20,000 naira just within a twinkle of an eye, 20,000 naira. And if I place a trade 0.0, that same trade, 0.01 on, let's say, in a D30 or US 100 or US 30, I still have to wait for price to travel roughly around 20 to 30 p before I still make that same 20,000 naira on indices, right? But on corn with 10 pip, 0.01, I can make 20,000 naira for those 10 pip. And imagine I'm going in for a standard lot. If I'm going in for a standard lot, I'll be making roughly around 207,000 naira per pip movement, right? 207,000 naira per pip movement. So 200, that's even 207,800 and 825 naira per pip movement, and I'm going in for just 10 pips in this market. So that should be making me roughly around 2 million naira. I mean, what other farmland could be greener than this? What farm establishments can you start up that will give you 2 million naira profit on a day-to-day basis, just targeting 10 people? I mean, if I told them to, okay, let's take, for example, I want to start up a business. What business can I start up in Nigeria today that will give me 2 million naira in profit, right? In just few minutes, right? Of taking a standard lot trade, just targeting 10 pip movements in the markets, right? And then let's go to the crazy one, coffee, which is the most profitable instrument in any financial market. Coffee. Imagine making 8,000 naira. Imagine making 8,300 naira per pip movement on an instrument, right? And I'm targeting just 10 pip on 0.01, right? 10 pip on 0.01. That is 83,000 naira. Have you ever made 83,000 naira on a 0.01 trade before? Right? To be frank, with 10 people, I'm not talking about price traveling from Mount Kilimanjaro to Jerusalem, right? So I'm not waiting to see a very long candlestick. That's the difference now. I'm not waiting to see a very long candlestick. I'm not waiting for CPI. I'm not waiting for NFP, right? I'm not waiting for FOMC. I'm not waiting for the likes of this volatility news. I'm just trading the market on on the standard price movement, right? Technical analysis, and I'm making 83,000 naira for just 10 pip on a move on coffee, to tell you how profitable it can be. And imagine I'm going in for a standard lot, right? On coffee. A standard lot on coffee will be giving me roughly around 831,825 naira, right? Imagine making 831, that's 831,300. Sorry, 831,300. That's on a standard lot. 831,300 on a standard lot on coffee. And I'm just going in for 10 pip. That's 8 million naira, 8.3 million naira. So what more are you looking for, right? What other farmland can be greener than the agro commodity markets? Remember I said it's greener here. We are always saying the grass is greener on the other side, but the grass is greener on the agro commodity market. Yes, the grass is green on indices, the grass is green on currencies, but I can assure you that agro commodity market is a good land forward for farming. It's a good land forward for farming. So if I can make this as much as this on agro commodity market, why would I sleep on such a market? You should ask yourself. So if I can, why is it that I have to wait for price to travel 200 pip and I'll be praying for price not to reverse? I've seen clients call me, I placed this trade and I saw profit, but the profit was not enough, right? I was on a standard lot, the profit was not enough. I wanted to close it when it gets to 200,000. And I say, price has already traveled almost 300 pips. How much do you want it to travel again? Do you want to fan it? Right? I've seen YouTube videos of people fanning, blowing price. They just put their mouth on their PC and they are blowing the price and praying that price continues to move up. Oh, that price has traveled almost about 50, 30, 50, 60 pips, almost close to 100 pips, and you are still expecting it to continue to move up. Why? Are you a prophet or something? You get? So if I'm targeting smaller pip, right? If I'm targeting a shorter distance in the market, I'm able to go into the market and I'm out with good profit. And that's why I say your margin and your lot size is key when it comes to this business, especially when you want to trade on the agro commodity markets. So if you're not so if you don't have a whole lot and you still want to trade on the agro commodity and you decide to trade on micro lot size 0.01 to 0.09, you still would make something good from it, right? If you have a fair amount of money and you want to trade your mini lot size 0.1 to 0.9, you still will make a good amount of money. If you're trading 0.1, you're making 16,000 naira on wheat per pip movement, 20,000 naira on corn per pip movement, right? On coffee, you're making 83,000 naira per pip, right? On coffee per pip movement, right? So how green again can the market get, right? So let's look at this quote from Robert T. He said, "Today's wealth is in what? Information." He said, "Today's wealth is in what? Information." And a person that has the most timely information owns the what? The wealth. Today's wealth is in what? Information. So I can tell you the richest persons in the world are persons that have access to information. Access to information, right? The other day we had a news that, okay, yes, federal government is going to be removing the cap on the dollar, right? Federal government will be removing the cap on the dollar. I can assure you that a lot of persons saw that news, right? You are yes, I'm talking to you. You are on this live, you are on this class. You saw that news and you didn't act on it, right? You saw that news and you didn't act on it. What should you have done at that point? At that point, the dollar was at what? 1,400 when that news was dropped. 1,400. Immediately the next day I bought. I added to the one I had before. And by the end of the week, I was seeing dollar at almost about 1,009. And I was just fanning myself. I was smiling. People was asking me why. Just because I got a simple piece of news. And the way the news came in, it was funny because I was just on my phone and then the news just came in. Pulse, what they call these guys? Pulse Niger just dropped the news. And I saw it on my notification tab, right? I saw it on my notification tab. And I asked again, what information are we sourcing for? As a person, what information are you working with as a person, right? I give you an instance of a scenario that happened just shortly after I started working with Rally, roughly around 4 or 5 years ago, right? I was I was in with my boss and we were just talking, and all of a sudden it came up on the TV that half of Australia was on fire, right? And my boss was like, this thing I'm on you, and I'm like, how? How? How is this in money? Because Australia is on fire. You are telling me it's money. As in how? Is it? Are you praying that good? Are you happy that bad thing happened to their country or bad thing is happening in the economy at this point in time? He said, no, you don't understand that. What is going to happen now is that Australia is one of the largest producers of wheat, right? For the fact that and wheat is a very dry crop, right? Easy to catch fire. It destroyed a whole lot of farmland. That fire destroyed a whole lot of farmland, right? So, of course, I was not happy. He was not happy that news came out, but he knew that there was an opportunity there, and the opportunity there was that the price of wheat was going to shoot up because Australia could not supply their own quota, right, to meet up the demand, to meet up the world's demand, and that will cause what? Inflation in price. Just simple information. So I ask you again, today's wealth is in information, and a person that has the most timely information owns the wealth. What information are you sourcing for? Right? So that brings us to where can we find information for agro commodity? I just quickly took down some few websites where I source information. You could do a screenshot of this, right? You could quickly do a screenshot of this, have foreign information, and not just going to the website. Go to the website, turn on your notification bar, right? Turn on the notification bar, right? So once you turn on the notification bar, you'll be getting these updates on from time to time, right? If you turn on the notification bar, you'll be getting updates from time to time. So you have fun information as to what is happening in the agro commodity markets, right? So you have fun information as to what is happening in the agro commodity markets, right? So if I'm to trade the agro commodity market, let me ask you, if you're to trade the agro commodity market with how profitable the agro commodity market is, right? How much do you think you are required to start up with, or how much do you think you can start up with, right? Can anybody Can anybody give me a fair idea? How much do you think for a market as gigantic as the agro commodity market? How much do you think would be a fair amount to start up with? I mean, we've been trading before and we know profitability per pip, right? You compare it to, okay, how much am I looking at making in the market, right? Someone is saying 2 million, someone is saying 1 million, 500K, 1 million, right? Yes. So for agro commodity markets, right? For you to trade agro commodity market comfortably, minimum of #1 million, right? To trade agro commodity market. And #1 million will not guarantee you that you will trade a standard lot in the market. Hello? Are you with me? #1 million will not trade you a standard lot on agro commodity markets because one pip, right? Let's say you're taking a standard lot on something like coffee. One pip on coffee is 800K. Hello? One pip is 800K on coffee. So if I'm to trade coffee, how much do you think I will need to trade? Only coffee. Only coffee. How much do you think? How much do you think will be required for me to trade coffee on a standard lot? Right? So if you have, yes, it depends on the lot size, actually. It depends on the lot size. So if I'm going to be trading, and please don't forget that if all the instrument on the, because a lot of traders make that mistake, all the instrument on the market is not the same. You need to get that into your head. All the instrument on the market is not the same. So as a new trader, you need to know it now and know peace that all the instruments on the market is not the same. So if I'm going to be trading on this thing, if I'm going to be trading on agro commodity, and if I'm going to be trading on coffee and I'm going to be trading on corn, I would need a different amount because the margin I need to hold those trades will be different, right? So now that brings us down to somebody asks, what is the margin requirement, right? So before now, we know that if you've noticed, if you've been trading for a while, you'll notice that the amount of money you need to hold a trade has increased because of the increase in the dollar, right? For those that are trading in Naira account, despite the fact that you are trading in Naira account, globally, you are still trading in what? In dollar. What Rally Trade does is we convert your dollar to Naira through Bloomberg in order for you to trade in your local currency. But in truth, you're still trading in what? In dollar. So the actual amount of money you make in dollar is still what you make on your Naira account converted to Naira for you. So there's no difference. So if you're trading a Naira account, you're trading a dollar account, you still make the same value. You still make the same value, right? So before now, if I needed $1 to hold a trade on Euro USD, right? Now I would need $2, right, to hold that same trade. So if I'm to play 0.01, and before I used to need $1 to hold a trade. That's my margin that will be taken out, right? Now I need $2 because of the increase in the what? In the dollar rate. Because of the increase in the dollar rate. So now, because of that now, I now need more margin to take trades on agro commodity per se, right? I need margin, right, to take, I need more margin to take trade on the agro commodity market. So if I'm looking at trading on the likes of coffee, and I want to trade on coffee comfortably with, let's say, mini lot size and make roughly around on a standard lot and make roughly around 800K per pip movement, at least I should have good 10 million naira sitting in my trading account, right? I want to trade on coffee. Yes. I need at least 10 million naira sitting in my trading account. If I need to trade on the likes of corn, right? If I need to trade on the likes of corn, soya beans, at least I need good 5 million naira sitting in my trading account, right? If I'm going to be taking trade based on lot size, if I'm going to be taking trade on a 0.01, right? I need at least a minimum this thing of #1 million, right? Because don't forget, if because all the analysis I did per 10 pip, right? You also need to be able to do your risk to reward ratio, right? And also have enough money to hold your margin and also hold you in terms of retracements, right? If I'm going to be taking a trade, I don't want to risk up all my margin, right? Your risk management is very important. So at every point in time, I want to risk 10% of my total capital. I want to risk what? 10% of my total capital. So if I'm going to be placing a trade on, let's say, a standard lot on corn, that will be giving me 200,000 naira. 10% of that 200,000 naira will be 20,000 will be 20 million naira, right? 10% of that will be what? 20 million naira. So that's it. So 10% of that. So you when you do your calculation very well, if I'm actually going to be trading 0.01 on agro commodity, right, and I'm going to be trading on corn, right, I could trade with 2 million naira 0.01, and I can trade comfortably without any issue. Right, I could trade comfortably without any issue because of how profitable these instruments can be. Right, within a few trading days, you should be able to recover, or you should be able to come up with your capital, right, and have and still you should be able to make profit almost equal your capital and still have your capital intact. That's using good risk to reward ratio, right? Like I tell people, trading the agro commodity or trading the market in general is not a money doubling scheme. And if you have a good strategy to it, you definitely be trading risk free. You would always be trading risk free, right? So that being said, let's quickly look at questions. Right? So questions are in regards to agro commodity. Let's quickly look at them. Okay, so someone is saying you can hold. Okay, I didn't get your question, but if you have your questions, just drop them on the chat. Okay, so someone is asking, what's the time frame for agro commodities? Of course, most as an agro commodities trader, most times it's best to stick to intraday trading. You could trade in between the day, right? You might not be able to have enough money to trade on a long term, right? And scalping on agro commodity might not work, right? Because you won't get that volatility for scalping, right? So what you notice is you place a trade, the chart doesn't move, and all of a sudden it just picks up, right? All of a sudden it just picks up, right? So and it's easy. Someone is saying that it depends on if your direction is right. It's like I said, it's actually easier to foretell the direction on agro commodities compared to indices and currencies. Why? Because over time, agro commodity follow a particular trend. If it's going to sell, it's going to sell. If it's going to buy, it's going to buy based on the news, right? So if it's going to sell, it will sell. If it's going to buy, it will buy based on the news, right? So and you're looking at the news from weather, you're looking at inflation data, right? You're looking at weather, right? So most of those things are what affects agro commodity. Most of those things are what affects agro commodity. So we're actually going to be having. Okay, someone is asking, does technical analysis work the same as indices and currencies? Technical analysis works on agro commodity, yes, but certain indicators will not work, right? Like your moving average might not be very effective when it comes to agro commodity, right? Your RSI might work when it comes to agro commodity. RSI might work, right? But the major technical analysis you should be looking out for is support and resistance. For every market, your support and resistance is always a standard, and your support and resistance will be your major basis for taking your trade. And you know the basic rule: always take your buy after a resistance point, take your sell below your support. But every other technical analysis or every other gimmicks you use in trading might not work when it comes to agro commodity, because you're not getting that as much volatility as you're getting on indices and currencies. So I'll take two extra. Okay, so yes, I already said it. Support and resistance applies to agro commodity, right? Support and resistance applies to agro commodity, right? So in our next session on agro commodity, I'm actually going to be taking you on the live trading on the charts, right? I'm actually going to be taking you on the charts on agro commodity. I say, is there any fundamental news for agro commodity? I say yes, there's fundamental news for agro commodity. CPI is a key inflation data, And like I said, inflation data is it tells you the cost of getting consumable goods. Agro commodity is a consumable good. So definitely your CPI data would affect agro commodity. And the good thing is CPI is actually going to be coming up this month, and there'll be a live trading session for agro commodity for CPI. Right. So it's going to be a massive one only for people that have enough capital to trade the agro commodity market, only for people that have enough capital to trade the agro commodity market. Notice how agro commodity, you don't easily get signals on agro commodities like that, because we know a lot of persons might not have the capital to follow through on those trades, right? So it's if you're interested in trading the agro commodity with me, right, reach out to your account manager and get yourself up to speed, get your account funded, and I can assure you that by the time we are going to be trading the CPI data for this month, we are going to make quite a lot on agro commodities. So just get yourself prepared for it. Right. So I'll take the last question before I round the class up. Any other question? All right, I think so. That's it for it. So okay, so people are asking for my number, right? You could easily Okay, you could easily reach out to your account manager, and then you'd link up with me, right? I'm Solomon by name, and of course you can always come down to the office when you need to, and if you're really interested in trading the agro commodity market, we can look at it together. So a lot of persons are clamoring that we go back to the indices to see the effect of the news, right? The effect of the news. Okay, so all right, so I'm going to drop all the answers to the remaining questions on the chat session. I want to quickly go back to the chat to see what's happening, and also see how others can take advantage of the indices class. So for those that took trade on USD card, for those that took trade on USD card, that took trade on USD card, like I said, I didn't expect you to stay in the market for too long. If you are taking your trade on USD card, but you should have closed your profits right on time, right before the market started retracing. Price got almost all the way to it might not hit your trigger your take profit because of spread, but at least it got into good profit. And if you had a very good lot size on that trade, you would have taken profit on that trade. That's for USD card. So let's look at other ones. Let's look at other ones. We took trade on, oh, let's go back. We took trade on Euro USD. Euro USD busted our take profit points, right? Euro USD busted our, if you didn't take advantage of that trade, then shame on you. So I'm seeing that it actually came out negative for the dollar, because say I'm seeing Euro USD move. Let's confirm how it came out for the dollar. Let's confirm how it came out for the, yes, it's okay, let me refresh. Let me refresh. Yes, it came out negative. You can see it came out at 52.6. It came out at 52.6, very negative for the dollar, and that's why it pushed up. And that's why it pushed up. So it actually followed that pattern. So you could see this one came out neutral, it came out negative, positive, negative, positive, and now this one is coming out negative. Technical analysis repeating itself. So it came out neutral, negative, positive, negative, positive, and now this data coming out now is now negative, right? So if you are taking trade on Euro USD, you will have busted your take profits. GBP USD. Okay, we didn't take on GBP USD. We took on USD JPY. USD JPY didn't really move much, right? But if you were sharp enough, you'll have taken closed out your trade. But I'll still advise you still okay for USD JPY. I'll still advise you still hold on to your sell because very soon we'll be going into the Asian zone. And once we go into the Asian zone, of course, that will give an edge to the JPY, ensuring that price still continues to push down. The dollar is weak at this point in time, so I don't expect the dollar to actually push up. So the card, it almost got to take profit. I didn't expect you to wait until price get to take profit. You will have closed out by now. You should have closed out by now, right? We took trade on gold. Gold did not move, so that's this didn't move gold. So wow, look at US 100. US 100 tore our take profit. It went all the way down, tore the take profit, dusted it. US 2000 really messed up a bit. It came down, but if you're still on a sell trade on US 2000, I still advise you okay, at this point in time, if you're on a sell trade on US 2000, depending on the lot size you're using, right? The buy actually went into profit a bit, right? If you're not close that, I'll just advise you try and scalp the volatility. So from this point here, because the dollar actually came out negative, I just expect that price should still range in between these points, right? I expect that price should still range in between this point, but still hold on to your entry, right? Still hold on to your entry. There's a possibility that price would actually still hit the take profit on a sell before pushing back up into a buy. And if you are smart enough, you could scalp the volatility and still make good money from the market, right? So let's look at you took US 500. US 500 went all the way down, went through our take profit, and it was a wonderful trade. And I think that was all. We took AUD USD. We took AUD USD. AUD USD is actually in a very good profit position at this point in time, and I expect that by now you should look at closing that trade. You should look at closing that trade, though it should still push up though. But if you have good profit on AUD USD, like I said, if you were using a very good lot size, you can close out that trade. And that brings us to the end of this session. It was nice having you guys, and do have a wonderful day.